between 2020 to 2025, we saw reported inflation at 24.8%, which means the prices of things on average, according to the reported data, has gone up by 24.8%, while the median wage in America is expected to have risen by around 20% over those same 5 years, which means the average person got a raise, but the average person is poorer now than they were before, because even though they got a raise, they can't keep living the same lifestyle that they had 5 years ago. But this isn't a new phenomenon. This has been happening for a while. If we take a look at the 5 decades between 1971 to 2021, what we can see is that the median new car sold in America has grown in price by around 840%. The median house in America is now 1,200% more expensive. The median college tuition, public university tuition for 1 year in the United States is now 2,000% more expensive, while the median household income in America over these 5 decades has grown by around 600%, which means yes, over these 50 years you got a raise, but you have to pay way more of your salary just to afford a house. You have to pay way more of your salary to drive a car. You have to pay way more of your salary to go to college. You have to pay way more of your salary just to survive, which means, yeah, you're making more money, but you have less money to save or invest if you're living that same lifestyle. Now at this point, you might be a little bit confused why I'm calling this a hidden tax. I mean, it's inflation. It's unfortunate, but inflation is growing faster than people's incomes. Why is that a hidden tax? Well, take a look at this. In 1975, the United States of America had roughly $500 billion worth of national debt. By 2020, that national debt number ballooned all the way up to $27 trillion. And now in 2025, the United States has more than $36 trillion worth of national debt. Now, what does this national debt have to do with this hidden tax? Well, let me show you. Here's how the United States government functions. They go out and they generate tax revenue. Now, you know now what the tax revenue is. These are the visible taxes. This is where the United States government is generating their revenue. The government then takes that tax revenue and then they go and spend that money. They might spend that money on infrastructure or military or teachers or firefighters or Medicare, whatever it might be. They go in and spend that money, but there's one problem. The government has been spending more money than they're generating in taxes. And if the government wants to spend money that they don't have, they need to go out and borrow that money. They need to go into debt to get that money, which we can see the debt has been growing significantly. Why is the debt growing significantly? Because number one, the government is spending more money and they're not generating enough visible taxes in order to fund that additional spending. So the government has been going into debt. Now, who is the government borrowing this money from? Well, they can borrow money from regular people like you and me, but there's not enough dollars out there to lend to the United States government. By the way, that's called a treasury. Then when the United States government doesn't get enough money from regular people, they can go and borrow money from foreign countries. People like China and Japan, who are actually the largest lenders to the United States government. But again, these foreign countries aren't lending enough money to fund all of this government spending. That's when the United States government can go to one other entity. They can go and borrow this money from an entity called the Federal Reserve Bank. Now, although they're called the Federal Reserve Bank, they're actually not federal. It's not a part of the United States government. That's even what it says on the website. They're not a reserve because they're not sitting on any cash reserves. You'll see why that matters in just a second. And they're not a bank because you and I can't go there to deposit money. However, the Federal Reserve Bank is the central bank here in the United States, and they have the ability to lend money to the United States government. Now you might be wondering, how does the Fed lend money to the United States government if they're not sitting on any cash reserves? They don't have any cash. How do they lend money to the United States government? Well, the way that they lend money to the United States government is because they have the special power to print money. They can create money essentially out of thin air. So now when the United States government wants to spend more money, the Federal Reserve Bank can, print this money, lend it to the United States government. The government can then go out and spend that money. Now, in the short term, this is a great thing because that means the government has more money to hire people. The government has more money to build bridges. The government has more money to issue contracts to so many businesses. That's great for the economy because that means companies are getting money, that means people are getting jobs, and that means the economy is booming. But if the United States government could just borrow all this money from the Federal Reserve Bank, why do we have to pay all these taxes in the first place? And the reason why is because there's a cost to this. The most expensive kind of money is free money. When the Federal Reserve Bank goes out and prints this money, there's a cost to that. Because remember, our paper dollars are not backed by physical gold. They're not backed by any precious metal. So when you print more of these dollars, you're inflating our currency, which means the value of each individual dollar goes down because there's so many of these dollars out there. And when the value of each individual dollar goes down, that causes the prices of things to rise. So when you hear people talk about inflation, it's not just the prices of things rising, it's the value of the dollar falling, causing the prices of things to go up. And this is why I call it a hidden tax. We know where these tax dollars are coming from. I just showed you on the board where these visible taxes are coming from. We had those 10 different options out there. We can see when you pay a federal income tax, where the money is coming from and where the money is going. But now when the government is spending money they don't have through debt, that money is being funded by the Federal Reserve Bank, there's a cost to that. And that cost is inflation. Now, it is a tax, it's just not a visible tax, it's a hidden tax. You're paying that price because now your salary doesn't stretch as far, and if you save your money in the bank, well, that $100 you saved has less buying power today than it did last year, and it has less buying power today than it did 20 years ago, and it has way less buying power today than it did 50 years ago. That's why this spending is a hidden tax. Now, I'm going to show you something that you can do to help fight back that way you can keep more of your hard-earned money. So let me talk about how you can win in this situation. The way that you win is to stop being just an employee and a consumer and to start being an investor. And let me show you why. When you're an employee, you get a W-2 salary. You're going to be paying these income taxes and payroll taxes. The top tax rate on your federal income tax is 37%. Plus you have to pay an additional 6.2% in payroll taxes, plus your employer also has to pay an additional 6.2% in payroll taxes. So when you are a W-2 employee, this is your top tax rate versus when you are an investor. Now you're not paying these tax rates, you are paying this, the capital gains rates. And at the time of me recording this video, the top tax rate for your investment income is 20%. And know when you earn your money from your investments, you're generally not subject to payroll taxes, which means you can earn more money and keep more of it for yourself. But that's just the beginning. When you earn your money from a job, the way that it works is you earn money. The first thing that's going to happen is you pay taxes, and then you get to spend whatever's left. But now when you shift how you earn your money, let's say you start your own business or you have a real estate portfolio. Now you have a business, and the way it's working is you're earning money. Now before you pay taxes, you get to spend your money. You get to spend your money in your business that is going to help grow your business. Maybe this means you have to spend money on travel in order to learn more things, have more meetings. Maybe you have to spend money on your car. Maybe you have to spend money on your laptop. Maybe you have to spend money on your phone. Maybe you have other business expenses that you have to spend. You spend money first, and then you only pay taxes on whatever's left. Here you spend whatever's left, here you pay taxes on what's left. And this is the biggest reason of them all. Remember when I showed you this diagram of how we have this hidden tax where most people's wages are not keeping up with inflation? Well, let's look what happens if you were an investor. Between the years of 2020 to 2025, we saw that inflation outgrew wages versus at the same time the stock market, more specifically the S&P 500, grew by a little bit under 100%, but let's call it 90%, which means yes, incomes didn't keep up with inflation, but investors became a whole lot wealthier. And this is not a new trend. Remember, these stats for the 5 decades between 1971 to 2021, well, over these 50 years, the stock market grew by over 4,000%, which means the average person became poorer while investors became wealthier who had a long-term mindset. And again, I'm talking about the S&P 500. This is why it is so important for you to become an investor and build your financial education, because this economic system is designed to reward investors. And when you're just a W-2 employee, you're paying the price. That price is the highest taxes plus the hidden tax. This inflation hurts the average person, but it's benefiting investors. Unfortunately, we're never taught this stuff. That's why I'm making videos talking about this. Now again, if you want to learn more about how you can be more aware as an investor or be a smarter investor, you can join Market Briefs, which is my free newsletter. to stay up to date on what's happening in the markets. And when you join Market Briefs, you'll also get an investing masterclass as a bonus just for joining. I have those links for you down in the description. And if you liked this video, the best thank you is to share this video with a friend. That way we can help spread this financial education. Thank you for watching. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.